Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Firstly, Asian stocks. Markets were mixed on Monday with, of course, falling crude prices that weighed on the shares. Also, we've been looking at the Chinese mainland markets. They were slightly higher, resuming trade on Monday after the Golden Week holidays. Now, the Shanghai Composite closed up 1.45% or about 44 points at 3045.143, while of course the Shenzhen Composite ended up 1.9% or 38 points at 233,385. Also, we're looking at the dollar that held slightly steady against the yen at 102.85 after tumbling 1% on Friday and remained below a one-month high of 104.17 on Thursday. Against the major basket of major currencies, the dollar last traded at 96.531, having retreated from Friday's two-month high of 97.19. European markets were mixed in early trade as, of course, investors remained cautious following the weak US job report on Friday and, of course, also the falling oil prices. The Pan-European Stock 600 index was down about 0.2%, with sectors pointing in different directions. Tracking the losses of the US dollar that suffered on Friday after US non-farm payroll data for September came in below expectations. Against the euro, it was at 1.1180. Sterling slipped again 0.2% to 1.24, taking a breather in the week of the flash crash in Asian trade on Friday, when it suddenly plunged to a 31-year low of 1.1491. Gold rose to a second straight session in the commodities sector on Monday after falling in the preceding 8, buoyant by post-holiday buying in China and, of course, weaker dollar. While, of course, we're tracking the slowing in US job data, bolstering expectations that US interest rate hike would only be gradual, gold was slightly higher, 0.6% at 1263.48 an ounce, of course, after the yellow metal touched a 4-month low of 1241.20 on Friday. Gold ended up about 4.5% lower last week, its biggest weekly decline since November 2015. In the energy sector, we're tracking oil prices. On Monday, they were lower on doubts that OPEC-led plan to cut output would rein in global oversupply that had, of course, dodged markets for over 2 years now. US West Texas Intermediate futures were down about 50 cents or 0.9% at 49.40 a barrel. That is the most important for the first day of the week. Stay tuned for more headlines. That's all for me. See you next time. Bye-bye.